Hi everybody, my name is Drew Stegman and welcome to another video. Today we're talking about how to get started investing in stocks if you're a complete beginner. So if you're watching this video and you've already been investing in the stock market, then this video is not for you. But if you are new to investing and you want to learn how to get started, that's exactly what we're going to talk about in this video. So if you are new to the channel and you want to learn about stock market investing and how to build wealth through investing in the stock market, then you'll definitely want to hit that subscribe button because I talk a lot about stock market investing on this channel. But anyway, the first thing we need to understand if we're going to get invested in the stock market is what are stocks. You know, when I was a kid, for example, I used to always ask my dad, what is a stock? I was always fascinated by the stock market, but I could never understand what he meant when he always told me that when you invest in a stock, what you're doing is you're investing and you're actually owning part of that business. So you're investing into a company. That's the first thing. And you become a part owner when you buy a stock. So if we think of, for example, companies like Apple and Amazon, I'm sure you've probably heard of Apple, the company that makes the iPhones. You've probably heard of Amazon. I mean, if you haven't, then you've probably been living under a rock. The point here is that Apple and Amazon, right, two of the largest companies in the world, and these companies trade on the NASDAQ exchange. So the NASDAQ exchange is one of the largest exchanges in the United States. You have the New York Stock Exchange, which trades thousands of different stocks, and then you have the NASDAQ exchange, which trades companies like Apple and Amazon. A lot of the big technology companies trade on the NASDAQ. So this is a major exchange. Once again, you have thousands and thousands of different companies, but these are high quality companies for the most part. There's very stringent criteria for which companies get listed on these exchanges. But once they're listed on an exchange like the NASDAQ, they are actually available to buy through the public. So the public, like you or me, for example, a retail investor could buy Apple or Amazon stock. And the ticker symbol, and we'll get into this next, the ticker symbol for Apple is AAPL, and the ticker symbol for Amazon is AMZN. So the ticker symbol of a stock is basically how it's recognized, and this is what the stock trades under. So when you log into your brokerage account, and we're going to talk about that next, which is opening a brokerage account so that you can actually buy and sell Apple and Amazon. But when you log into your brokerage account, what you'll end up doing is actually typing in this ticker symbol. You can also type in the name of the company, but another way to identify Apple and Amazon stock would be to type in the ticker symbol. But anyway, those, Amazon and Apple, like I said, most of you watching this video have probably heard of those companies. But the next thing we're going to get into is opening a brokerage account, okay? So a brokerage account is an account that you open, as I just mentioned, to buy or sell stocks. So we're buying and selling companies like Apple and Amazon. We're becoming part owners of these companies when we open a brokerage account. So what that means is that when we open an account with, let's say, here's an example of a broker. I'll give you two examples actually. I'll give you Webull and I'll give you Robinhood. That's another one. And these are two brokers that I really like. I opened an account with them several months ago, and you actually get 2 free stocks when you sign up for Webull, and you get 1 free stock when you sign up for Robinhood. So I'll leave those links in the description if you want to sign up for Webull or Robinhood. It's a completely free promotion. It costs you absolutely nothing. And by signing up, you can get invested in the stock market right away. And with Webull, you get stocks valued up to $1,600 potentially. And so you'll get your first free stock upon signing up, and then you'll get your second free stock once you deposit $100. And for Robinhood, you just get 1 free stock for signing up. So once again, those links are in the description if you want to use them and get your free stocks. Great brokers, pretty good customer service and everything, and they're really decent ways to get started investing in the stock market. And even if you don't decide to go with them, these are just a couple examples of stockbrokers, and I wanted to mention them, like I said, because you do get those free stocks, so it's a win-win situation, no cost on your end. Anyway, so these stockbrokers right here, what happens is when you open a brokerage account, we'll just I'm going to circle Webull and Robinhood. And so what happens is, let's say you go to buy Apple stock, right? Put Apple down here, AAPL, once again is the ticker symbol. So you want to buy 1 share of Apple stock. You're going to become a part owner of Apple. And so what this means is that when you place your buy order for Apple, your broker immediately gets this notification. And then what happens is it will send out this notification to, let's say, the NASDAQ exchange. And there's other ways that your order can get filled. But basically, what your broker will do, what Webull or Robinhood will do, is when you buy Apple stock, it routes that order out to all the market participants. It routes it out to the NASDAQ exchange. If there's some buyers on the New York Stock Exchange, or if there's some private buyers, or maybe they have another somebody inside who has an account with them, like you have a Webull account and then they have a client who has Apple shares and wants to sell Apple shares or wants to sell 1 share of Apple, what they'll do is they'll actually match up those orders. So basically, the stock exchange is interconnected globally, and in the United States, I mean, you can get filled in a second. So if you want to buy 1 share of Apple, even if you want to buy 100 shares of Apple, or even 1,000 shares of Apple, you will get filled in a second, because what happens is your broker routes this order out and it'll just go through in seconds. Not even a second, usually like 10 milliseconds, because there's so many people who are buying Apple and Amazon stock that there's just so many participants. These are stocks that are very easy to get in and out of, and so you're going to be able to buy and sell these stocks very quickly. And it's very easy to, within your brokerage account, like once you open a brokerage account and you're like ready to get started and you're like, okay, let's do this. It's one of those things where it's very easy to learn how to make these trades, like how to buy and sell. A lot of people get confused on what to do and like, okay, there's all these buttons, which one do I push? But I will leave a link in the description if you are in that situation where you want to learn more. But like I said, it's pretty straightforward, and usually your broker is going to help you with all that information. They're going to help you get what you need, and they're going to help you place that first trade in most cases. So that's nothing to really worry about. But the next thing I want to talk about, if you're new to the stock market, and this is very important. So if you're new to investing, you can choose individual stocks, and you can also choose what's known as an ETF, or another word you can use for this, and this is the word I like to use more if you're a beginner, is known as an index fund. So what are index funds? An index fund is a fund that typically will track what's known as the S&P 500. And there's actually, there's different indexes to track. Now you might be confused right now. You're like, what the heck is an index? So an index is, if you think about the S&P 500, for example, there are dozens and dozens of these index funds. And I'm going to give you 2 examples of funds that I really like that are great if you're a beginner investor and you're trying to get started investing like right away. You don't want to have to do research on individual stocks. Which company should I buy? What kind of stock should I invest in? If you're just looking to get started investing, choosing an S&P 500 index fund, in my opinion, is probably the best way to go. And then as you learn more, you can then buy individual stocks. But if you're just getting started, typically buying an S&P 500 index fund is going to be the best way to go as you learn the ropes and as you learn more about investing. But basically, an S&P 500 index fund. So first we have to define what the S&P 500 is. And so the S&P 500 stands for Standard & Poor's 500. And basically what this means is it's 500 companies that trade on U.S. exchanges, just like the NASDAQ that we talked about, the New York Stock Exchange. These are well-known companies like Apple, Amazon, Microsoft is part of the S&P 500. You have Google, for example. That's another stock that's part of the S&P 500. And so basically, there's this committee that meets together and they discuss which stocks should go in this index. It's kind of a complicated process, but basically these are the highest quality, top tier companies that are within the S&P 500. And if they don't remain that way, then they get kicked out of the index. So what this means is that if you buy an S&P 500 index fund, you're going to be investing in 500 different companies. But here's the thing. So I'll give you an example of one that I really like. the Vanguard S&P 500 index fund. And just like a stock, we were talking about Apple and Amazon having ticker symbols like this one. This is the ticker symbol for the Vanguard S&P 500 ETF. So when you buy this ETF, what this means is that you can actually buy just one share of this exchange traded fund. So the share price currently is about $300 per share. So one share of this would represent ownership within the S&P 500 index. So when you buy one share of this for $300, you are owning the S&P 500. You're owning a diversified collection of companies like Apple, Amazon, Microsoft, and Google that I just mentioned. And so this is why I think this is one of the best ways to get started. If not, in my opinion, actually, I think it's the best way to get started investing if you're a complete beginner, because there's no thought process. Literally all you have to do is open a brokerage account. It doesn't have to be Webull and Robinhood, but like I said, if you want to get those free stocks, click those links in the description, and then you can use them if you want. But other brokers include like TD Ameritrade, E-Trade, and all those other brokers. There's a ton of them out there. You do a quick Google search on the best brokers, and I'm sure you'll come across some similar information. But basically, you open a brokerage account, and then once you have that brokerage account open, you know how to buy and sell stocks within your account. Call your broker, ask them if you need help placing your first trade. You buy this ETF, you deposit whatever the share price is, $300. We'll just say the share price of this ETF is $300 per share. And so you're going to deposit, let's say $500. So you can buy one share and then you're going to have $200 left over. But Drew, what do I do with the rest of the $200? Well, there's something known as fractional shares, which some brokers will actually let you purchase as little as $1 of each investment. So you could actually just invest $1 into this ETF. So before you open a brokerage account, that is a consideration if they offer fractional shares, because not all brokers do this, but I'm pretty sure Robinhood and Webull do offer fractional shares, but I could be wrong on that, so don't quote me. But anyway, you deposit, let's just say $300, you buy one share of VU, and boom, you're invested in the United States stock market. You own 500 companies within one investment. And so you get what's called diversification. And diversification is very important because it spreads out your risk. And so historically, the S&P 500 yields about 7%. I'll put 10%, because some years the S&P 500 is up pretty big. So you're looking at about 7 to 10% returns on an annualized basis. And so the key with this is not to sell your investment. You're not going to sell your Vanguard S&P 500 index fund, because if you did, you could be potentially missing out on a lot of the market's growth. And what happens is a lot of people get excited when the market goes up and they start buying more. And then when the market sells off, they panic and they sell out. And so a lot of people are actually invested in these S&P 500 index funds, but they try to time the market. So that's the key, is not to time the market. You want to stay invested over the long run and keep your money in there, not touch it. Just keep putting money in, don't even think about it, and just keep buying the S&P 500. Now, as you get more advanced, you can start to buy individual stocks. So if you have a good base, I like to say maybe you have like $5,000 or $10,000 invested into an S&P 500 index fund. Well, this gives you time to learn, and you can invest that initial $5,000 or $10,000, and then you can say, okay, I've been doing some more research on stocks. I've been doing some research on different companies, and maybe now's the time to start investing in individual stocks. Or maybe I should invest in another type of exchange traded fund, but that's doesn't track the S&P 500, but there's other types of ETFs out there that you can choose from that give you kind of a different strategy depending on your investing goals. So there's a lot to learn with investing, and so that's why I say if you're new to investing, just investing in an S&P 500 index fund. It's a basic 3-step process, guys. You watch this video, right? You already got that done. Open a brokerage account, and then you invest in the S&P 500. So that's really it, guys. There's nothing else to it. And like I said, as you learn more about investing, you subscribe to this channel, right? You start to learn more about the market, then you're going to be able to do more advanced strategies, maybe buy some individual stocks once you know how to analyze businesses and things of that nature. But anyway, guys, I hope you enjoyed this video, and I hope you got value out of this video. I do want to say one more thing real quick, and that is that I'm currently working on my course, which is all about beginner investing. And I don't have it ready quite yet, but I will leave that link in the description. It's going to be the first link once that course is complete. So if you are interested in learning more about investing and you want a complete guide from start to finish on how to get started investing and all of that, then you'll definitely want to click that link in the description once it's available. And I'm going to try to have that available for you guys as quickly as possible. But I also want to do a very good job on it because I really do want to provide as much value as I can in that course. But anyway, guys, thanks so much once again for watching, and I'll see you in the next video. Take care.